perhaps a whole lot higher than it's been in the past few years.
Well, it's funny, like, I was amazed in the quarter just gone how corporate America was able to sort of wring out profit with higher input costs, all of this earnings growth, earnings expansion. And you wake up this morning with Europe just falling into COVID chaos, higher input costs, inflation, and you have JP Morgan, Morgan Stanley, and Goldman Sachs all saying, now's the time to buy in the equity markets, guys. Here's some great pockets you can look to. Really?
Like one of the surprises, arguably, of the last couple of quarters is that profit margins have gone up for the S&P 500. So in other words, yeah, their costs are rising, but they are able to increase their prices enough to cover those expenses and then some. Whether they can sustain that, of course, becomes a question as we get through the fourth quarter and beyond. For the moment, though, I mean, it is working in the company's favor. And, of course, that means they end up with more cash you have to figure out what to do with. So, who knows? Some of that may well end up going into buybacks.
All right, it's a good chart of the day and certainly gives us something to to keep in mind as we wonder about what's the next trajectory when it comes certainly to the equity markets. Okay, that's your chart of the day. What about your stock of the day?
Franchise Group. Now, this company used to be Liberty Tax Service.
Okay.
That then they made a shift a couple of years ago into franchising. They actually sold the tax business this year. So they own 4 retail chains. They started out with a company called Buddy's that does rent-to-own for furniture and appliances and so on. They own another furniture chain called American Freight, and they own a couple of others. Names are pretty self-explanatory. Vitamin Shop and Pet Supplies Plus.
A little bit of everything.
A little bit of everything. But they're going more into the furniture business. They made a deal today to buy a chain called W.S. Badcock, which is down the southeast. They're paying $580 million. They expect the deal to add to earnings immediately after it's completed. So you're talking about a stock in Franchise Group, ticker FRG, that set a record today in response to this deal. And at the moment is up more than 11%.
Nice bump up. Stock's up almost 65% so far this year. So investors have certainly been all in on this one.
Right. The transition to franchising seems to be working out for them.
All right. Great one. Dave Wilson, check out his stock of the day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and, of course, on Twitter at The One Dave. Dave, thank you so much. All right, back to World and National News we go. Back to our 99.1 newsroom and Nancy Lyons. Hey, Nance.
Thanks, Carol. Officials in Waukesha, Wisconsin say the suspect, who they say plowed an SUV into a Christmas parade last night, was fleeing a domestic disturbance. Police Chief Daniel Thompson offered details today about the suspect and the charges he'll face.
Daryl E. Brooks, male, 39 years of age, who is a resident of the city of Milwaukee. 5 counts of first-degree intentional homicide, with additional charges based on the investigation.
Thompson says those killed in the incident have been identified as 4 women and 1 man. At least 40 others were injured, including at least 6 children. President Biden spoke about the tragedy earlier today.
Last night, the people of Waukesha were gathered to celebrate the start of a season of hope and togetherness and Thanksgiving. This morning, Jill and I and the entire Biden family, and I'm sure all of us, pray that same spirit's going to embrace and lift up all the victims of this tragedy.
President Biden spoke in an event in which he announced he has nominated current Fed Chair Jay Powell to stay on in his position. Jurors have indicated they may be having trouble reaching a unanimous verdict on several allegations in the trial of white nationalists accused of conspiring to commit racially motivated violence at the deadly Unite the Right rally in Charlottesville. The federal jury is being asked to decide whether white supremacist and white nationalist organizations are responsible for the violence during 2 days of demonstrations in 2017. Jurors will also be deciding if the defendants are liable for compensatory and punitive damages. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser here in our Bloomberg Interactive Broker studio in New York City at Bloomberg headquarters. Ed Ludlow out there at our offices in London and our London studios. Of course, Ed Ludlow, one of our colleagues, covers tech and so much more for us, typically on the West Coast. And that's where you spend an awful lot of time talking about Elon Musk.
Too much time covering Elon
Never
Musk's
too much.
Twitter account, specifically his Twitter account, which kind of combines all of the things that I'm supposed to be doing at once. But yeah.
Well, listen, these executives, politicians, we've seen many people learn how to productively and effectively use social media. Speaking of Elon Musk, interesting story from Dow Jones Wall Street Journal, and it talks about Elon Musk and Jamie Dimon just don't get along. Mr. Musk, and I'm reading from the Journal, has spurned Mr. Dimon's JP Morgan Chase and Company for years, turning to other banks while expanding Tesla and its broader empire. Conversations over the years between the two companies have often upset one side or the other, according to people in the know.
Right. And, the latest spark point between Tesla and JP Morgan is litigation, where JP Morgan says it's seeking around $162 million of fees that it says Tesla owes it from a trade that the bank helped the company pull off in 2014. And after this story came out, Elon Musk tweeted that very serious requests must have very serious responses, although he doesn't appear to be taking it too seriously.
Well, and JP Morgan saying just last week, we have provided Tesla multiple opportunities to fulfill its contractual obligations. So it is unfortunate that they have forced the issue into litigation. Again, I'm talking about and reading directly from this Wall Street Journal story.
Right.
If JPM doesn't withdraw their lawsuit, I will give them a 1-star review on Yelp. This is Mr. Musk saying in a response to the Journal, "This is my final warning."
Yes, textbook Elon Musk and his engagement with other companies and other executives.
Yeah, I mean, it's very interesting, and as a result, tends to stay in the media orbit, because here we are once again talking about Tesla.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have less than 13 minutes until the closing bell. Markets have been reacting through the day to President Biden's decision on Fed leadership. Jay Powell has been selected and nominated for another term as chairman, and the president also elevated Governor Lael Brainerd to the role of vice chair. Now, these picks will largely produce, I think it's safe to say, a less contentious debate in the Senate when it comes to confirmation. We're moving into the midterm elections next year at a time when inflation is the major issue, right? 10-year Treasury up by more than 8 basis points in yield. We're just under 163, and the 2-year at 58 basis points with a gain of nearly 8 basis points on the day. In terms of equity price action, a lot of the financials are moving up. As a result of the entire yield curve rising here in the U.S., financials helping to send the S&P to a record right now with a gain of about 0.3%. Also, a lot of strength in the energy complex. OPEC Plus may reconsider plans to add supply next month if consuming countries go through with this possibility of a coordinated release from their respective strategic reserves. Crude oil right now, 76.45, so we're up about 0.7% off the best level of the day. Weakness in a lot of information tech and communication services stocks, largely the function of that backup in rates, sending the NASDAQ composite lower by about 0.6%. We've got the Dow higher by about 0.5%. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. All right, it is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Good news wasn't always easy to find at this month's climate talks in Glasgow, but one achievement is worth celebrating. Over the course of the summit, more than 100 countries signed a first-of-its-kind pledge to slash global methane emissions 30% by 2030. Here's why that matters. Methane, a so-called super pollutant, can trap 80 times more heat than carbon dioxide, but it only lasts in the atmosphere about 12 years, unlike CO2, which endures for centuries. So reining in methane emissions will pay off very quickly. What's more, up to half of human-generated methane emissions can be cut at low or even negative cost using existing technology. This puts the pledge's ambitious goal well within reach. There will be challenges ahead, to be sure, but the global methane pledge is still a most welcome development for the world. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session. Watching the markets, certainly the equity markets moving around here. We're taking a leg down on those major equity averages. Still in the green, though, significantly, or at least more definitively for the Dow Jones Industrial Average. Call it flat on the S&P 500. You heard Doug talk about this. NASDAQ, though, down by 136 points. But it really does feel like it's a day where the Treasury curve was something we were all focused on, especially as you saw the shorter end, but both the 2 and the 5, really along the yield curve, those yields moving up. Let's get to it with David Dietz, Managing Principal and Senior Portfolio Strategist over at PPAC Private Wealth Management, $10 billion in assets under management. And David's back with us on the phone from Summit, New Jersey. David, good to have you here with myself and Ed Ludlow on this Monday. First and foremost, the Fed meeting and the the president deciding on a second term for Jay Powell, but Lael Brainerd also having a very significant position on the Federal Reserve.
Yeah, obviously it was a very difficult decision for President Biden. He delayed it far longer than anyone expected. I think at the end of the day, this is a real positive for the markets and the economy. And here's why. Although they're both very strong economists and Fed representatives, the fact of the matter is, Powell's more of a proven quality. He's been running the Fed since 2018. He did a magnificent job backstopping the economy during the worst pandemic in 100 years. He's a proven quantity. So I think the markets are cheering his renomination to another 4-year term. The other thing, of course,
what's the cheering that's going on? What are you seeing in the cheering? What aspect of the financial markets and the trade today show you cheering?
Well, I think that particularly with the movement in the Dow, that's being driven by strength in reopening stocks, cyclicals, and particularly financials. And so there, of course, if there was a difference between Brainerd and Powell, is Powell perceived to be a slightly lighter touch on regulation of banks. And you're seeing very strong movement in the banks today. Of course, you got Travelers, Goldman Sachs, JP Morgan in the Dow, which is helping lead it. And so the feeling is that there will be a little less risk of onerous regulation by Powell going forward than we might have seen under Brainerd.
David, I think I'm right in saying that you're a firm believer that markets set rates and not the Fed. Where do we go from here, given these appointments?
Well, at the end of the day, I think interest rates are likely to head higher. Why is that? I think the key drivers here are, of course, ultimately, I think a year from now, COVID-19 is going to be less of a problem. Sure, there's a lot of scary scenes and headlines coming out of Europe, but the fact of the matter is when you look back a year, we've got so many more tools, Ed, to deal with COVID-19. You get the 3 vaccines, you've got the antivirals. Now just about all adults will be able to get a booster shot here. So we're likely to win this war. I think that is going to continue to spur the economy. And of course, as the economy strengthens, people have more confidence. I think you're going to have more spending. That's going to add to inflation. The more inflation you have, interest rates go up. And I think there's going to increase confidence in the business sector to borrow more money. Both of those things, I think, are going to start to push the interest rates up. And remember, we're trying to get back to normal. As recently as 2019, we saw 2.9 on the 10-year Treasury. We're nowhere close to that now.
Well, does that then hearken a Fed and a Jay Powell Fed being much more aggressive when it comes to raising rates? If you sound pretty optimistic, safe to say very bullish. And so having said that, does the Fed need to be even more aggressive when it comes to raising rates at this point, David?
Well, I think if I'm right that the economy strengthens and COVID wanes, I think you're going to see more inflationary pressures. Offsetting that, of course, will be some debottlenecking, as it were, of the ports and so forth as more people can get back to work and help unload the ships and so forth. But I do think you're going to see more inflation. What we saw just recently, 6.2%, totally unacceptable. I think some of that's temporary, but some of it's built in. And ultimately, lenders will demand more. I mean, what we're seeing now, one of the reasons of the strength of the market is you've got a 10-year Treasury at 1.6, but inflation's at 2.6, so it's negative real interest rates. Makes no sense at all. So I think interest rates will move up, and there will be pressure on the Federal Reserve to keep taking away that punch bowl to offset those inflationary pressures and normalize interest rates.
In the meantime, talk to me about the TINA trade. There is no alternative for global listeners who are wondering what TINA is. Where are the pockets of opportunity then, to your mind?
Yeah, absolutely. So if we're right that the things look good for the economy going forward, that people will start to engage in even greater numbers in the economy, then it seems to us that more cyclical stocks could get a tailwind here, while some of our pandemic favorites, the Zooms and the Pelotons of the world that catered to people locked down, will be a little bit less in favor. So, so we see dividend-paying stocks, energy stocks, material stocks, financials. If interest rates do go up, their net interest margins will expand. That could be an excellent place. And when you start looking at valuations, smaller stocks, indeed, anything other than those top 10 mega caps look a little bit more attractively valued.
Is it weird and counterintuitive that we see rates moving up and yet we still had the S&P headed toward another record today?
Well, it's barely a record. Of course, we saw the
NASDAQ. Yeah, it's probably not going to end that way,
today.
But
and so what I do think is, the S&P is that mix between those mega cap techs and the smaller Main Street mid caps and smaller caps. And so I think on balance, the news has been good and has pushed S&P up. But of course, it has been weighed down by some of those NASDAQ names that we're seeing today because, of course, their profits are much further out. And if interest rates go up, the present value of those deteriorates a little bit. I think that's what we're seeing.
All right, we're going to run. Hey, David, have a good Thanksgiving. David Dietz, he's managing principal, senior portfolio strategist over at PPAC Private Wealth Management, $10 billion in assets under management, with us once again on the phone from Summit, New Jersey. And just a few minutes left in today's trading session. We're seeing equities take a leg down, so we are pretty much going to end, no doubt about it, at our lows of the session, down about 11 on the S&P 500. Dow Jones Industrial Average having its gain in just a few minutes. Now still up about 44 points, but certainly different from where we were about an hour or so ago. And the NASDAQ down about 185 points. All right, it's time to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Katie Greifeld counting you down to the closing bell here to take us beyond that bell with a global simulcast shown now by Carol Masser and Ed Ludlow over in London. We have got a global theme bringing together Bloomberg Television, radio, and YouTube. And the crucial moments of the day came, of course, at 9 a.m. with that all-important announcement. Fed Chair Powell will remain. Carol, it looks as though the market initially took it in its stride, but now sort of nosediving a little bit lower in terms of the S&P.
Yeah, I think, Caroline, it has to do, and I'm going to step into a little bit of Taylor's territory here, but I think it has to do with the rate moves and what we saw certainly in the yield curve, 2 and 5. And if you take a look, we're pretty much at our highs in terms of what we're seeing with yields and staying there for the day. I think what's going to be key going forward, Ed, is whether or not we get through all the week's economic news, including core PCE, which is crucial to the Fed, whether or not we maintain these levels when it comes to yields.
Yeah, and language is important, right? We painted Brainard as a dove, as expansionary, but she follows the data. She's voted in line with Powell pretty steadily. And it was interesting on stage alongside President Biden, her first really substantive remark being, I will deal with inflation, alongside her nominee Powell as well. So, you know, it's really hard to see any sort of divergent path. It's basically consistency, right, when it comes to monetary policy.
And clarity, and you do wonder how much the bond markets and the equity markets, Katie, are getting clarity today. I was just taking a step back and looking at a long-term view. We started this year, 2-year was at 10 basis points. We're now at almost 60 basis points. So if you think about a 50 basis point move all year, what is that signaling? And are the equity markets responding just a bit?
And I don't want to alarm anyone, but the VIX, it's back above 19. It looks like it's spiked into the close, which makes sense given what you saw with the S&P 500 in those last few minutes.
Volatility in the bond market goes to volatility in the stock market. The S&P 500 falling some 15 points. Remember, we have been higher at the start of trade. S&P 500 closing at 4,682. Meanwhile, we see the NASDAQ really feeling the pain. It was the growth stocks that took the legs lower, down by 1.25%. NASDAQ closing at 15,854. That's 202 points lower. The Dow, well, it was a bid for value, 17 points higher, but basically unchanged on the day, 35,619. And let's zoom out. Let's look at what the small caps did, because this really signals what we think about value, what we think about, well, the overall health of the domestic economy, down by 0.5% on the day, Carol.
Yeah, and you do wonder how many people were closing out positions, perhaps getting a jump start on the Thanksgiving Day holiday, and maybe that's why we saw a little bit of that selling into the close. As for the S&P 500, 282 names higher, Taylor, in today's session, 222 lower. So almost an even split, but a little bit more of a risk on trade, just a hair.
Yeah, you know what's interesting? You really see that in the sector level as well, Carol. So I'm glad that you brought that up. Come here into the terminal for the radio audience that we do when we take a look at sector winners, sector losers. There are some greens even within the losing category. And that really highlights perhaps maybe some of the push-pull that we do continue to see. I'll start with the losers here. How much of this is, I hate to say it, technology, right? Software, media, semiconductors. Technology originally was a big outperformer and now a big underperformer on the day. We just quickly move up here. And Carol, this is out of growth. It is back into some of that reflationary, inflationary trade. Autos, banks, energy, Dividend financials are all up more than 1.5%.
All right, good to know. So let me continue on. There's a lot of green on Taylor's chart for those of you listening on radio. So let me go through some of the gainers today. Moderna, one of them, top in the NASDAQ 100, top in the S&P 500, adding another 7.2% onto its run this year. Let me just do a quick check on what the stock is up this year. It's up 170%. You know the news, booster shots for all adults cleared for both the Moderna vaccine as well as the Pfizer vaccine. We got that late on Friday, but nonetheless, we're seeing the stock up more than 20% in the past 4 trading days. Another gainer in today's session was Tesla, up about 1.7%. This too has been on quite a roll, up roughly 15% in the past 5 days, and that's after we saw a bout of volatility and a bout of selling as Elon Musk was selling and paring back his position in shares of Tesla. So the current 5-day rally adding roughly 175 billion in market cap to that company. And one more name I want to bring to you, Vonage specifically. We're seeing that name. We did see that take a bump up in trading today. You can see rallying more than 20%. Ericsson agreeing to buy Vonage Holdings, its biggest ever deal, a takeover that concludes a brief but successful activism, let me try that again, campaign by Jana. Ericsson making a $6.2 billion all-cash offer for Vonage, $21 a share, and the stock just finishing below that.
Yeah, I mean, for all the focus on the Fed, there is a lot else going on in the world, a lot of focus on the reopening trade, a lot of focus what's happening in mainland Europe as well, with lockdowns tied to COVID. Peloton Interactive down for the 4th consecutive session. The dismantling of the stay-at-home stock is being discussed, but then thought about again in the context of Europe. On this particular stock, there's data from M Science, which basically shows Peloton sales dropped off a cliff last week. It's soft data, but we'll continue to monitor how it does into the holiday season. Visa as well, down 2.6%. A lot of concern from Wall Street, specifically about consumer spending in Europe. Will we see more lockdowns further to what we've seen in Austria? We see some unrest politically in response to those, as well as vaccine mandates. Will that continue to weigh on consumer spending? And EA, a very specific story, but their latest hit, Battlefield 2042, not the hit that they were expecting. Analysts at MoffettNathanson saying it's not going to be the catalyst that investors were hoping for. You can see there that stock down 4.6%, Caroline.
Yeah, notable decliners on the day. Let's have a little look at what was declining in terms of FX. Well, everything versus the US dollar. The dollar index up 0.4%. We're at a 14-month high on the Bloomberg dollar. So actually it was the Japanese yen, your usual havens. And even on a day where Ed mentioned we are worried about COVID, particularly some of the numbers and the cases rising in Europe, but the yen didn't catch a bid. In fact, this was more a story of, dare I say it, Taylor, your all-important bond market. Japanese yen off by some 0.75%. The Swiss franc, another key haven trade, usually off by 0.6%. The dollar index powers higher. The Canadian dollar down 0.5%. That's even as we saw oil perhaps manage to stay elevated, even as we expect perhaps some tapping of those strategic reserves as soon as tomorrow. A great scoop coming from Amory Hordern over in the United States. Zinc, though, some of the metals caught a bid today. Zinc, a notable one. That's as Glencore, a key sort of broker of commodities, but also a producer, was saying that they're going to tap back on their production of zinc, well, largely because of energy prices over in Europe. To that end, natural gas actually fell some point today, down more than 5% here in the United States. Let's have a look at what happened in terms of sovereign bonds, because I leave the US to Taylor, but yields spiked everywhere. Italy bonds up 8 basis points. We saw it over in Austria as well. Remember, as we worry about Austria with its COVID numbers, Canada up 11 basis points on that 5-year, Taylor.
Yeah, and you know, I'll just quickly run through this. And Carol, I know it's really hard on days like today when you get confirmation of how a composition of a Federal Reserve really starts to look next year. Not to get breathless, but you do have to talk about rate of change. And you're up 9 basis points, 8, 7, pretty much all across the curve. It is yield higher. Now, long-term trend, you could argue, okay, the last few weeks, this is exactly where we've been. But you are up, what, 50 basis points on the 2-year since the start of the year. So there has been this theme, and we're continuing that today, Carol, of yields higher. And you do wonder if the confirmation of that Federal Reserve chair, at least the clarity around that, really has sort of solidified in investors' minds how we're thinking about 2022 and rate hikes.
All right, so we've been focusing on the Fed, understandably so. We still have some key earnings that are continuing to come out, and that includes Zoom today. And that stock's already up about 5% 5.6% in the after hours. The expectations going into this round of earnings for the third quarter were pretty low because the expectations are with the reopening that Zoom would not stand to benefit. It's been struggling a little bit. Well, the company boosting its revenue forecast for the full year. The guidance beat the average analyst estimate. So now for 2022, the year forecast, the company sees a revenue of $4.08 billion to 4.08 billion. Forgive me, just reading through on the terminal. It had seen 4.01 billion to 4.02, so upping that and investors liking that. As for the adjusted EPS, 484 to 485. It had seen 475 to 479. So again, that is a bump up. I mean, again, the stock is now up about 7% in the after hours. Heading into this, Ed, it was off about almost 30% here, and it hit a 52-week low in the regular trade. So there is, again, the expectations were low going into this, so this is a positive surprise for investors.
Zoom, fascinating. I mean, all the calls are right now to get into reopening stocks, not Zoom. But remember, I've covered this company for several quarters now, and every quarter they say, our product's sticky. People are going to be using this on their commute to work for further education. We're not going anywhere, and we need to look more onto the earnings call, but it seems like they were right in what they were saying.
They might well prove sticky if you're looking at Germany, and some of them try not to get breathless there as well.
Right.
But Angela Merkel, the leader of Germany, for the next few months at least, is still remaining incredibly concerned about the pickup in COVID cases. Europe is starting to be a story of, well, shutdowns once again. How much, therefore, do we return to a stay-at-home trade, even though over here in the US, we're more worried about the inflation read and what that means for growth stocks?
And it's incredible when we're almost 2 years into this and still talking about lockdowns. You could argue, Katie, that when you take a look at companies like Zoom, how do you pivot for all three scenarios, in office, hybrid, and all the way work from home? And that CEO saying that they're looking at all sorts of different innovations like whiteboarding, right, smart gallery. So how do you look at co-located, remote, and then, of course, some companies coming back in, and you wonder if, with all of these stocks, how do you sort of pick these companies that are choosing all three of these, right, to benefit from all different scenarios?
Yeah, it's really interesting. And I mean, as we get concerned again about COVID, especially in Europe, even though that's boosted the vaccine makers, it hasn't been the same sort of textbook, neat, stay-at-home trade that we were used to. I mean, if you look at Zoom and Peloton leading into today, both down, obviously Zoom having quite the after-hours rally, whereas that they're just not feeling the same sort of love that they did in 2020 when this was the theme to trade on.
Yeah, exactly. So it's interesting to see. And we do want to know, as Taylor highlighted, what are some of the new businesses that maybe keep Zoom interesting as the world continues to reopen? 7.6% there in the after hours Zoom. I do want to mention Urban Outfitters out with their third quarter, and they're selling off more than 10% in the after hours. All right, that's going to do it for our market wrap, our cross-platform coverage on radio, TV, and YouTube. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you're listening to Bloomberg Business Week. Let's get a check on world and national news for you. Nancy Lyons, take it away.
Thanks, Carol. President Biden is sticking with the current Fed Chair, Jay Powell, saying continuity is important for our financial system right now.
At this moment, both enormous potential and enormous uncertainty for our economy, we need stability and independence at the Federal Reserve.
Biden says Powell has proven he can manage the Fed without political interference. Powell, a Republican-appointed Fed chair, will likely win a smooth confirmation in the Senate, although progressive Democrats may be disappointed. Biden also elevated Lael Brainerd as vice chair, and she may face some Republican pushback. Officials in Waukesha, Wisconsin say last night's incident in which an SUV rammed into a Christmas parade was not a terrorist incident. Police Chief Daniel Thompson says the suspect apparently was involved in a domestic disturbance right before the incident.
The suspect involved in this tragic incident is identified as Darrell E. Brooks, male, 39 years of age, who is a resident of the city of Milwaukee.
Thompson says Brooks faces 5 counts of intentional homicide. In addition to 5 deaths, more than 40 people were injured, including at least 6 children. The President and First Lady Jill Biden are getting ready for the holidays. The First Lady accepted the official White House Christmas tree outside the White House this afternoon. The large tree arrived on a horse-drawn carriage that came up the White House driveway that runs along the North Lawn. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar along with Ed Ludlow. And we want to go back to Zoom earnings because we're definitely seeing this stock move in the after hours. And when we speak about after hours, we saw it really rallying big time. Let me just pull it up on my Bloomberg terminal. And it is now up about 6.3%. But again, caveat, this is a stock that's been selling off, Ed. We know it. There's been concerns about what's the business, what's the growth story going forward, especially as the world reopens. And as a result, this is a company that's been looking for new revenue streams.
Yeah, and also remember that the world has kind of panned out how they said they would, the hybrid model. If you look at Apple delaying its return to offices into the new year, some distance into the new year, I know a ton of people that are sort of mixing it up, half from home, half going into the office. What are they all using? They're all using Zoom.
I use Zoom today. I use Zoom today
Right,
for
exactly.
a conference call, and you continue to see people lining them up for you, right?
Right, and the forward-looking discussion is what do they do to change it, to improve it? How are we going to need to use it in a year's time? And if you look at the CEO's comments, they're basically saying, right, now's the time for us to prove we can innovate, which is a very Silicon Valley thing to say.
Well, and in the meantime, competition nipping at their heels, right? We saw that certainly when it comes from Microsoft Teams. We're seeing that aggressively move into the markets. They've also, Zoom particularly, been moving into new areas. Zoom Phone, their cloud-based telephony business. They've got lots of competition from RingCentral and others, as well as that. So as soon as they move into something, there's some established players who are quick there to kind of give them a run for their money.
But it is credit where credit's due, because 3 quarters ago or 2 quarters ago or the end of last year, they did say they were going to do this. And they appear to have executed that strategy quite well. And, you know, the market does tend to have a little short-term memory when it comes to these things from earnings calls.
Yeah, exactly. And we'll see what happens. Like I said, the stock's been beaten up. It hit a 52-week low in today's regular trading session. It's down about 28% so far this year. So again, I think people have been, people by meaning people, I mean investors, a bit downtrodden on the stock. And so maybe that fourth quarter outlook being better than expected has certainly given everybody a surprise. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Let's begin with the news after the bell. Zoom Video reported results for the last quarter above forecast, and then at the same time, the company boosted its revenue forecast for the full year, and that guidance was above the average analyst estimate. Shares right now in the late U.S. session better by more than 4.5%. It's kind of a curious day in the equity market. Within the final moments of today's trading, a lot of the gains that were in place throughout much of the day evaporated. Markets spent the session reacting to President Biden's decision on Fed leadership. Jay Powell has been nominated for a second term as Fed chair. The president also elevated Governor Lael Brainerd to the role of vice chair. Obviously, this is going to take out a level of uncertainty and create with it a little bit of continuity. So the conversation now can focus on the question of how aggressive the Fed might be in combating rising inflation. Today, the entire yield curve was up. 10-year Treasury gaining more than 7 basis points in yield. We were last quoted at about 162. The 2-year at 59 basis points, up by more than 8 basis points on the day. There was strength in energy and financial shares, but on the negative side, information tech and communication services stocks were down. So we had the NASDAQ composite off about 1.3%. The S&P comes in by about 0.3%. The Dow, though, holds on to a slim gain. Let's call it 0.1%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Just squeezing it out. All right. Doug, thank you so much. Doug Krisner with the Bloomberg Business News Flash. Got to say, I've been looking forward to catching up again with our next guest. We're talking about Grant Verstandig. He is co-founder of Red Cell Partners. It's an investment firm backing disruptive tech-led companies in the healthcare, also defense spaces. Grant was chief of digital for United Health Group after founding and selling his company Rally Health to United Health Group's Optum unit. Grant, by the way, was with me back in October at the Milken Global Conference on a panel. It was entitled Bots, Bytes, and Brains, Extending Longevity Through Technology, really looking at the role of technology when it comes to healthcare. And Grant joins us from Aspen. So good to be back with you. How are you?
I'm doing well, my friend. It feels like yesterday we were together at Milken.
It does feel like yesterday. Well, it's good to have you here with Ed Ludlow and myself. First of all, got lots to talk about, but let's get to the news. Tell us about Zephyr AI, what this is all about and the significance of it.
Yeah, thank you. So Zephyr is really the first company that we spun out of Red Cell, which, as you mentioned, is our investment and incubation efforts that really focus on disruptive change in healthcare and defense, and a bit of an extension from our time at Milken. Zephyr AI is really taking my experience with some incredible co-founders that I have. Yisroel Bremer was the sort of chief analytics officer, if you will, of the DoD in charge of solving impossible problems, and our CTO was my head of machine learning at Rally, and we just wanted to build a technology that was AI first and data second, because, and we talked about this a little bit in our panel, there's just AI for everything, and in healthcare right now, many of them are science projects, and so what differentiates us is we took publicly available data and wanted to build an AI and to see if we could use our AI to find unique or differentiated or novel insights into something that people hadn't seen before. And just to give you a sense of how powerful the AI is in the sea of decades of publicly available data, our first finding, and we published it in a peer-reviewed journal within Nature, was you can use our machine learning, and we found that azithromycin is actually, and yes, that is the antibiotic that we all have probably taken
several times.
Z-Pack. Yep. Can actually be a more efficacious drug for lung cancer than the average 5 chemo agents that are used for the specific cancer. And so it's really, how do we use this technology to find the right drug at the right place for the right patient? And I think it's going to change the world by really bringing that AI meets personalization into healthcare, and that's what we've been missing.
Well, and hang on a second. I want to jump in. And Ed, just to be fair, and I highly recommend that everybody check out the panel that Grant and others did with me at Milken. But Ed, this is all about, the conversation dealt so much about, and certainly Grant's perspective of shifting our thinking away from that we've got to find a cure for things and a fix to really making strides to stay out of the hospital, stay out of doctors' offices, really stay out of the healthcare system. And Grant, that's what it's all about. It's a real major rethink in terms of treatment.
So well said. That's why you should do my job for me, Carol. At the end of the day,
you'll get my bill. You'll get my bill.
Okay, fair enough. Ed, it's nice to meet you, but I'll give you a great example. I mean, when you are having a healthcare issue, my guess is the only thing you think of is when you get on the other side of that healthcare issue. You want to be a patient, whether it's a loved one or yourself. You want that patient experience to be as small as possible. So imagine using AI to keep you out of the hospital, keep you out of the healthcare system, to make sure that maybe you don't need to take 6 drugs, you only need to take 3, but no single doctor was able to look at all the permutations, find the right drug, and that's exactly what Carol and I spent a lot of time talking about, because this is really how you democratize data and actually make healthcare a well care and health care system, not a sick care or patient-centric system, which is all about, unfortunately, diagnosis, and with diagnosis comes we got to cure it. If we can't cure it, it doesn't count, and that's, I think, a losing battle if you're trying to cure one disease after the next, because it's playing whack-a-mole, right? There'll always be another one.
Right.
I guess what the pandemic's got me thinking of is how my healthcare has changed because of the pandemic, how I use technology more, how I engage with my healthcare provider. Just very quickly, I mean, is this just the start of a norm that the pandemic has caused for how we think about the use of data in our healthcare?
That's a great question. I think you're absolutely right, because, so I'll give you an example. Before the pandemic kicked off, telehealth accounted for between 1% and 5%, back of the envelope, of total healthcare spend. And through the pandemic, it's now driven, I think it's 300 to 500% above that. And so you're still seeing major changes in how we interact with healthcare. The problem is it's still a relatively small amount. And I think the pandemic, candidly, was the single greatest disruptor to healthcare, to your point, because people realized, maybe I don't have to go to the doctor for that. I can just do a telehealth visit or interact with an AI that checks on my temperature and the color of my incision and makes a determination on, is that an infected operation and I got to go back to the hospital, or nope, that actually the scar looks like it's supposed to. So I think you're absolutely right. I think it's going to be the greatest disruptor to healthcare, actually.
Grant, we knew we weren't going to have enough time, so you've got to come back in the future so we can continue this discussion. Really appreciate your time today. Grant Verstandig, he's co-founder of Red Cell Partners, joining us on the phone from Aspen. And like I said, go to Milken, their last conference in October, because it was a really interesting panel that we did. You're listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Ed Ludlow, you're from the UK, right? Have you celebrated Thanksgiving a lot? Oh, I'm not hearing Ed's audio, so hopefully we'll get to that in just a moment. And we'll ask him about celebrating Thanksgiving. We are going to ask the president and CEO of Ocean Spray about it in just a moment. In the meantime, let's get back to your top business stories and some of that news, earnings news, after the close. Hey, Doug Krisner.
Hey, so do you want to begin with the after the bell stuff? We can do that. All right. To Zoom Video reporting results for the last quarter above forecast. The company's also boosting its revenue forecast for the full year, and that guidance was above the average analyst estimate. The stock has been volatile in late session trading, right now down, interestingly enough, by about 0.1% after having been up by as much as 5% earlier. Today, much of the equity market reacted to news on Jay Powell being nominated for a second term as Fed chair. Lael Brainerd, the Fed governor, has been nominated to the role of vice chair. Interestingly, we were higher for much of the day, but weakened in the last couple of moments in the equity session, with the S&P down about 0.3%, NASDAQ composite today off about 1.3%, but the Dow manages to gain about 0.1%. And a 10-year Treasury last quoted in New York at a yield of 1.62%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
You are listening to Bloomberg Business Week. I'm Carol Masser with Ed Ludlow in London. I'm in our Bloomberg Interactive Brokers studio. We'd like to welcome our listeners to Bloomberg 106.1 in Boston for our next guest. We're thinking of Thanksgiving, and we know that is certainly on the mind of our next guest. There's turkey, there's stuffing, of course, gravy too, but another must-have, it's a staple, cranberries and cranberry sauce. Tom Hayes knows a lot about that. He is the president and CEO of the ag cooperative Ocean Spray. He's former CEO of Tyson Foods, and he's joining us on the phone in Boston. Tom, so great to have you back with us. Happy almost Thanksgiving. How are you?
I'm doing great. Thanks, Carol, and happy Thanksgiving to you and the listeners. This is a special time of year, and we're so excited to be a big part of it.
Well, you certainly are a big part of every Thanksgiving celebration. Certainly were in my house and continue to be so. So tell me how this year compares with last year, and how easy or difficult will it be to get cranberries on our tables this year?
You know, there's a couple of big factors, of course. Number one is demand. So consumers are coming together more than they have in the last couple of years. We're seeing a lot of demand, not just on cranberry products, but all of our products. And it's something that is, not unexpected. They want to get together. They haven't had a chance to be with family and friends, and they're just really trying to take advantage of something really positive. The other side of that is that the costs are a lot higher. So whether it's supply chain impacts or, other things that are, just making our lives a little bit more difficult in terms of getting products to consumers, it does put us in a position where we have high demand, but also high cost. So I think that's going to put extra pressure on not just on companies like Ocean Spray, but a lot of consumer products companies to deliver everything to the Thanksgiving table. But, so far so good for us. So we're really happy about the position we're in. And hopefully everybody will be able to find what they want and enjoy the holiday.
Tom, I don't want to bring the mood down ahead of Thanksgiving this week, but are there any sort of particular ingredients, particular products that are severely in short supply, things that if you haven't done your shopping yet for Thursday, you should be worried about?
I think it depends on the retailer. It depends on the part of the country and, how the supply is held up because of the increased demand. So I think the advice that we've been giving consumers and, people that are asking us the question is that, you need to be a little bit flexible. Some of the consumers are really excited about the iconic cranberry jellied sauce with the ridges from the can. They love to open that up and slice it for their family members. But they could be maybe in a situation where they got to pick up a whole berry, or they have to make cranberry sauce from fresh cranberries. So I think those are the things that
surely
we're
not
focused on.
Make your own cranberry sauce. Who does that?
Yeah, well, there's certainly a lot of people that I think still do, but we, I'm a sample size of one here, but our family certainly loves the canned cranberry sauce.
I got to say, my mom made
Full
homemade.
disclosure, so do we. We make ours homemade as well. Yeah.
You know, your food supply chain, I mean, this is something, you know, just like with the pandemic, Tom, we've learned about what it takes to create a vaccine. And I think with all of the supply shortages, we're understanding that a supply chain isn't just we go to a store and it's not on the shelf. It's a lot more complicated than that. What has the recent shortages, how has it impacted you in terms of how you think about your supply chain?
It's really caused us to think very differently, Carol. And the thing that is the most interesting to me is the way that creativity has just been on display. So the company is owned by 700 family farms, and those family farms, do things in their daily operations that they've had to change as it relates to getting, whether it's transportation or materials to their farms in order to then produce the cranberries and send them to the cooperative. I would say that, the supply chain parts that we've been hit, for example, on steel cans that we put cranberry sauce into, we've had to get really creative. Because there's been a shorter supply of those based on demand, we've had to go to another can and a can size, and we've had to modify our lines and our plants to accommodate that. The other thing is on transportation. You may have heard about this, too much already, but transportation is really difficult, particularly with, lanes from the plants to our customers, to retailers and food service customers. It's really the cost has gone up, but it's not just the cost, but the availability. Sometimes you can't get those products to the customers at the time in which they need them. And so it's caused us to really, really think differently about, lead times and making sure that we're properly allocating products to customers. So the creativity is front and center. And I'd say that overall that's a good thing because you have, companies that are just thinking differently. We certainly have, and has created new capabilities where we didn't have them, frankly.
Hey, you've got facilities around the country, and you've got obviously bottling facilities in various state labors. Are you able to get the labors you want, or are you having to pay up a bunch to get them?
The costs have certainly gone up. We have been fortunate that we've been able to get the team members that we would like to. What we did experience, and what has been a difficult thing for us to overcome, has been, team members have left and retired. We have people come to Ocean Spray. They stay with our company because of the values that we have and the purpose that we are driven by. But there have been people that have decided to retire during the pandemic. So we are training a lot of new team members. Of course, some of those team members turn over, but we have, thank goodness that we've been in a pretty good spot in terms of retaining the folks that we need to get the job done.
Right.
On the transportation side, it is a little bit more difficult, but so far, I would say that the team has done, a wonderful job, keeping team members engaged at the plant level.
You're listening to Ocean Spray CEO Tom Hayes. This is Bloomberg. And hang on for a second, Tom. We're going to have more with you coming up. Still got a few more questions to ask you. In the meantime, we do want to get another check on world and national news. Following it all for us is our Nancy Lyons. She is in our 99.1 newsroom in the nation's capital. We're talking about Washington, D.C. Nance, all yours.
Thanks so much, Carol. President Biden is going with Jerome Powell to serve a second term as chairman of the Federal Reserve Board, and he's also elevating board member Lael Brainerd to vice chair. Bloomberg's Irv Chapman reports on today's White House announcement.
The president lauded Jay Powell for preserving the Fed's independence, standing up to what he called unprecedented political interference from the Republican administration which appointed him.
Jay's steady and decisive leadership helped to stabilize markets and put our economy on track to a robust recovery. That's an economy where companies have to compete to attract workers instead of workers competing with each other.
The president also lauded Powell for recognizing that climate change is a major risk to the financial system and that bank regulation must stay ahead of the risks posed by financial experimentation. In Washington, Irv Chapman, Bloomberg Radio.
A man suspected of driving an SUV into a holiday parade in Waukesha, Wisconsin, has been identified as Darrell Brooks Jr., and authorities say the 39-year-old will face 5 counts of first-degree intentional homicide. Police Chief Daniel Thompson says there was no police chase leading up to the tragedy.
We have information that the suspect prior to the incident was involved in a domestic disturbance, which was just minutes prior, and the suspect left that scene just prior to our arrival.
Thompson says there were 5 killed, 4 women and 1 man. They were members of the Dancing Grannies Club, as well as one was an employee of Citizens Bank. More than 40 others were injured. Authorities say the incident was not related to terrorism. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar along with Ed Ludlow on this Monday. This is Bloomberg Business Week, and our guest in this half hour, Tom Hayes, President and Chief Executive Officer of Ocean Spray. Tom, just got about a couple of minutes, and then we'll take a break, do some more news, and come back and continue with you. But I think about your background, former President and CEO of Tyson Foods, Chief Supply Chain Officer over at Hillshire Brands, and Sarah Lee, you've been at Conagra Kraft. What are the most interesting food trends that you think that are happening right now?
I think right now it's food trend is getting the food to the table. So I think outside of that, the
reality check.
Right. The biggest thing that has been before the pandemic, and certainly I think coming through the pandemic has been accentuated, is that consumers just want to feel emotionally connected to what they're buying, and they have been really looking for products with fewer ingredients. And they're really taking an active role in, not only what they consume, but also how they feel. And it's really the health aspects of, food have been front and center. The other thing I would say is, and this is, I've seen this in the pandemic, is that people are coming back to brands that they know and love. So there's a lot of focus on, what makes me comfortable, like I said, an emotional attachment.
Right.
But what do I know? What do I trust? What's a brand that I can feel comfortable with, and I've been using for forever, or maybe I've not used it in a while and I can come back to it. And we certainly have seen that at Ocean Spray. Our consumers are excited about our brand. They have come back to us to a large degree. We're excited about the households that we're keeping, and hopefully we earn that trust every day by quality products we produce.
Right, and you continue to really build out the brand in a thoughtful way, and maybe we'll get into that a little bit more when we come back on the other side. We're going to continue with Tom Hayes. He's President and Chief Executive Officer of Ocean Spray, joining us on the phone from Boston, Massachusetts. You are listening to Bloomberg Radio. Carol Massar along with Ed Ludlow right here on Business Week. Just a quick reminder of how we closed on this Monday. We saw the Dow Jones Industrial Average up 17 points, the S&P a loss of 15, and the NASDAQ down more than 200, pretty much finishing at its lows of the session. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The focal point of today's trading in the equity market was President Biden's decision on Fed leadership. Jay Powell has been nominated for a second term as Fed chair, and the president also elevated Governor Lael Brainerd to the role of vice chair. This will remove a little bit of uncertainty and emphasize continuity. It also now will allow the market to maybe focus more exclusively on the question of how aggressive the Fed needs to be to combat rising inflation. We'll get more insight into that Wednesday, perhaps with the release of the minutes from the last Fed meeting. At the moment, the market seemed to be pricing in a full 25 basis point rate hike in June and then a second increase next November. Today, the entire yield curve was up. 10-year Treasury last quoted at 162, a 2-year at 59 basis points. Now, it was interesting in the equity market. Much of the day we were at higher levels until the final moments of the session when the S&P went negative. I guess you can call it a bearish reversal. Remember, it is a holiday-shortened week. The S&P down today by 0.3%. We had a lot of weakness in communication services and information tech. That helped to send the NASDAQ composite lower by about 1.3%. Zoom Video after the bell with results for the last quarter above forecast. The company also boosted its revenue outlook for the full year. Stock's been chopping around in late trading right now. Very little changed in the late session. I'm Doug Krisner. That is your Bloomberg Business Flash.
With us, Tom Hayes, President and CEO of Ocean Spray. You know the name Ocean Spray. I remember Ocean Spray as being about cranberries, but Tom, I'm delighted to speak with you. I won't be in the United States this year for Thanksgiving, and it's actually sad because it's the first time I won't be for a couple of years, but we were discussing how more people than ever will get together essentially. There's so much to consider around supply chain, inflation, higher input costs, but at the end of the day, you're still the CEO of an important company this time of year. How much attention do you pay to things like the president's nomination of Jay Powell as Fed chair and Dr. Lael Brainerd as vice chair going forward?
We certainly, do. We have a government relations team that is trying to make sure that our interests are, best served, and so we constantly tell our elected officials what we think would be helpful for our 700 farmer owners as well as consumers. So that's something that's certainly front and center. I would say that most of the time we spend is really focused on our own sort of issues that are important to Ocean Spray, of course. So, but the, external markets greatly affect what consumers are able to spend and what certain policies will deliver as it relates to potentially inflation and otherwise. So we always have a keen ear to the rail on things that are coming down the pike, and we definitely want to make sure we influence where we can.
Well, Tom, dare I say, inflation, transitory or not? And I just wonder, in terms of, you are getting, I'm sure, intel when it comes to your supply chain and your need, and as well as your member farmers, about their costs and whether or not we see them continuing for a longer time, or maybe for something that's beyond transitory. I guess it is at this point. I'm just curious what you're hearing on that front.
So, at the risk of, being a downer, similar to what Ed said, because this is a fantastic week. Everybody has hopefully a lot to be thankful for, and certainly do a lot of celebrating. We don't see these cost pressures as transitory. We do see them, ongoing and continuing, and we don't see signs yet. I'm hopeful that we will. But right now, whether it's steel cans, like I mentioned, or if it's raw materials, transportation, everything is moving in the wrong direction. Now, having said all that, we also think at Ocean Spray there's a lot of opportunity for our products to be, regardless of what comes at us in terms of inflation, important to consumers because it's a superfruit. And you want polyphenols and antioxidants in their diet. We got to figure out ways to do that. And we will continue to fight the good fight here for our farmer owners and for consumers. And we haven't, by the way, taken pricing in the last 10 years. This is the first time we're taking pricing in the market for, to cover some of those costs. But we do, I think, a very good job of making sure that we contain our costs to make sure we deliver a great consumer proposition.
It's a really important time of year. It's important to be optimistic. It's been a long year, 2 pandemic years in a row. But what is the health of the consumer? You talked about the demand being there, but are you confident in the strength of consumer bank accounts and the economy going forward?
Yeah, we are, and we have seen it. I mean, if other companies have not, they might be in spaces where this is not something that is the consumers leaning towards these days. With being mostly at home or having been mostly at home, for a company like Ocean Spray, we've seen, because of what I talked about earlier, the brand strength that consumers really have spent, and they continue to spend their dollars on our products, and we do see the consumer being extraordinarily healthy. As we look to see what the implications are when we come out of the government assistance, does that have a change effect? Possibly could, but right now we're seeing the consumer remaining extraordinarily strong, and we're hopeful that continues. But for us, Ed, it's been we see a lot of tailwind.
Well, and it's good that you brought up certainly the government assistance. It has been crucial to so many Americans at this point. And even though we talk about consumers being in better shape and they have more money in their bank accounts, we know for many, those government payments have just kept them going and kept their families fed. You're involved, Ocean Spray is involved with the No Kid Hungry organization. Talk to us a little bit about your involvement, what you've been seeing, especially as we kick off this holiday season, which for many it's great, for many they still have to struggle through.
Absolutely, and we're keenly aware of that. So being that it is the time in which people come together and they celebrate and they want to be with their families more so than almost any other holiday throughout the year, we thought it would be fantastic to start this Better Together campaign, hashtag Better Together. And what we did was we partnered with Jesse Tyler Ferguson, and we have this national campaign going on that does benefit No Kid Hungry. And what it is offering inspiring holiday recipes, bringing nutritious, delicious sort of thank you packages to school staff across the country because of the great work that they do. And we're hopeful that, not only to, provide recipes and excitement around the holidays as people get together, but to continue to do this in a way that is benefiting kids. And we're very focused on making sure that we can do what we can from our perspective to, make the world a better place through food.
Are you optimistic, Tom, for the year to come, for things to improve generally?
I am. I would say a little bit cautious, cautiously optimistic, just because we do see that we have some challenges, right? Challenges to face in terms of cost. What gives me the optimism is that this cooperative continues to face up challenges all the time. So 90-year history, we invented cranberry sauce, and we sort of, grew the company from there, and it's been very successful, over the 90 years, and I would say we just continue to build that resilience. That's one of our values is a grower mindset, and I believe this is at work here. So people, although they see the challenges in front of them, they are fighting to get the best result that we possibly can every day, and for that, I'm very optimistic.
Biggest risk, you think, going into 2022?
So we have, for us at Ocean Spray, we have certainly not had a fantastic crop year, and this is something that we're very focused on because if we have, if we're selling less, of course, then we're not going to make the same proceeds for our owners. So what we want to do is make sure that we get, pricing in the marketplace, that we have, all the costs, corralled as much as we can and make sure we only spend money where we need to. And we will, pull through in a way that is going to, shine a bright light on the power of our team coming together to solve problems. But if there's something that, is sort of in front of us, is we've got a lot of headwinds. And, this year's crop has been down, and not the only crop in the industry, by the way, but the cranberry crop has been. So it just makes things just a little bit more difficult than they normally would be.
Well, we wish you well and a better year, certainly on that front in 2022, and a really healthy and happy Thanksgiving and really throughout the holiday season to you and your cooperative members. Tom Hayes, President and Chief Executive Officer of Ocean Spray from Boston. That's going to do it. For Ed Ludlow, I'm Carol Masser, and the whole Bloomberg Business Week team. Have a good and safe evening. This is Bloomberg.